Hello, welcome to the IEA London YouTube channel. I'm Andy Mayer, Chief Operating Officer of the Institute of Economic Affairs, and I'm delighted today to be joined by three distinguished guests. Victoria Hewson is the Head of Regulatory Affairs here at the IEA. Paul Smith is CEO of Morses Club, a doorstep loans provider. Eric Leenders is Managing Director of Personal Finance at UK Finance, the trade association for the UK banking and financial services sector. And we're here today to discuss Victoria's recent paper, published as part of our Who Regulates the Regulators series on the Financial Ombudsman Service. Now, while the FOS is not formally a regulator in the strict sense, it exercises de facto regulatory powers in retail financial services. It makes determinations of the complaints brought to it. Our link to the paper can be found in the show notes below. The paper was published weeks after the Chief Ombudsman of the FOS, Caroline Wayman, resigned amid a mounting backlog of complaints and controversy over levels of compensation. Victoria, perhaps you could get the ball rolling by setting the scene for the regulatory environment before talking us through your paper and why you're calling for major reform.
Yes, so the Financial Ombudsman Service was set up around 20 years ago in the Financial Services and Markets Act 2000. And it's not actually a sort of regulator in the formal sense, as you alluded to, and it's not part of the Financial Conduct Authority or the Bank of England or any of those sort of official regulatory bodies. It's actually a limited company, as it happens. And it was set up to resolve disputes between consumers and financial services providers fairly and reasonably and free of charge to the consumer. And it's obligatory for in-scope firms to submit to this jurisdiction and follow the complaints handling rules that are set out in the FCA handbook. And there's a sort of strange relationship that's both formal and informal, really, between the FCA and the Financial Ombudsman Service, with some of the rules are in the FCA handbook, so they're formal rules, and then the Ombudsman Service sets its own internal procedures and scheme rules. So there's already some tension there where it's quite difficult sometimes for firms to have a full, clear view and transparent sort of rulebook as to how the Ombudsman Service works. So then what happens is, if a consumer has a complaint and it can't resolve it directly with the firm, they can take it to the Financial Ombudsman Service, who will take a decision on what is fair and reasonable in the circumstances. And they have to pay due regard to law and regulation, but they're not bound by law and regulation. So they can depart from it as long as they can show that they've taken due account of the actual black letter laws and regulations. And what happened was, over the course of a couple of decades, the volume of cases exploded and really was beyond, I think, what had been anticipated when the system was set up. And operations have really struggled to keep up with the numbers, especially really the payment protection insurance mis-selling scandal was a big driver of that, with thousands and thousands of claims ending up with a massive backlog that had knock-on effects across the whole service. And lots of consumers were quite aggrieved because their complaints were taking months or years to resolve. Sometimes the FOS was waiting for a decision of a key legal point that had to go through the court. So it was all rather a difficult, disjointed process. And then the other thing that possibly hadn't been anticipated when the service was set up was the innovation, I suppose you could call it, of claims management companies who now will effectively advertise and solicit for complaints. This especially was the case with the PPI. I'm sure everyone remembers getting phone calls, spam phone calls, asking if you had been missold PPI to try and make a complaint. And then the claims management company will then help the consumer through their complaint in return for taking a cut of the compensation. And then slightly murkily, the jurisdiction of the Ombudsman Service then expanded to include claims against the CMCs, the claims management companies themselves. So it all became rather circular, and one might argue a little bit captured, with some potential conflicts of interest in there too. The cost per claim has rocketed, and is now way over budget and arguably in many cases rather disproportionate to the value of the case. I think it's now something like about £650 per case is the cost, which is all paid for by regulatory firms. Now, the outgoing Ombudsman, Caroline Wayman, attributed all of this sort of operational difficulties, if you like, and cost spiraling, as she attributed that, in part at least, to the increasing complexity of the complaints that the FOS is now dealing with, because they're seeing, I guess now the PPI cases have tapered off and been closed off. And so they're now seeing less of those very cases which have become very routine, and seeing more difficult cases dealing with pensions and investments, loans, which I'm sure Paul will talk about. Consumer credit has really exploded in case numbers. And of course, this raises the question of whether the FOS is actually set up to deal with these kinds of more complex cases, especially because they've recently had their jurisdiction extended again to cover small business claims. And so all of this has had quite significant effects in the market, probably especially for poorer, less affluent consumers and smaller providers, rather than the bigger banks, who to a certain extent can simply absorb and make provision for these unpredictable awards, whereas the smaller independent financial advisors and loans companies really just can't do business when you have no real guarantee as to whether your contracts are going to be enforceable or what kinds of compensation you might be exposed to. So I'll stop there, and I'm sure we will come on to some specific issues and some solutions and recommendations that I've included in the paper, and that I'm sure Paul and Eric will have some views on too.
Thank you very much, Victoria. Paul, could I bring you in to give your experience of the FOS?
So our experience of FOS is, as Victoria says, they are allowed to ignore statute wherever they choose to do so, and that's quite a shock to many MPs and peers that I speak to, because they were not aware at all that a limited company could choose to ignore law wherever they saw fit, without any kind of ministerial or lawmaker interaction from an elected body. And I think that really needs to be highlighted, because when our own MPs are not aware of that fact, I think that's quite shocking. And I can tell you now that almost every single MP and peer that I've spoken to are shocked and totally unaware of that situation. I think that the FOS has been weaponised by claims management companies and solicitors firms of solicitors who sit outside of the FCA's regulatory perimeter. This was an apparatus that was set up with very good intent to offer a free of charge service to consumers, and I strongly believe that it should remain a free of charge service to consumers. However, when clever operators choose to weaponise this service and force firms in the financial services sector to pay for their own lack of due diligence and lack of proprietary administration techniques, that needs to be curtailed. So I am not only Chief Executive of Morses, but I'm also a panel member of the Small Business Practitioners Panel, the FCA, which is a statutory body that is set up for the FCA to consult with. I'm also a board member of the Consumer Credit Trade Association. So I've got a broad horizon of experience to draw from in making my comments. I believe that what should happen with the FOS is that not the polluter pays for the examination of the complaint, but the person that is found to be failing in bringing the complaint, excluding the consumer. So what I mean by that is if a consumer brings a complaint directly against my firm, for example, we will pay whether we are found to be guilty of the contents of that complaint or not. If a claims management company or a solicitor's firm brings that complaint without having first executed proper due diligence on that claim, if that claim is found to be meritless, they should pay and not be able to pass on that charge to the consumer. That will force them only ever to bring proper and thoroughly examined claims to the Ombudsman Service. That will completely remove the huge mounting of claims without merit that the Financial Ombudsman Service receives, and it will allow proper claims to be examined in a thorough manner and to be done so with speed and efficiency.
Thank you, Paul. So, Eric, do you agree? Do the claims management companies act in the role, in many cases, as ambulance chasers? And are their vexatious complaints something that they should be charged for rather than the firms that they are chasing?
I think that's a very valid point that's been made, that actually where there isn't an economic consequence for bringing potentially a vexatious claim, there is no disincentive to mobilise and industrialise complaints activity. And that simply isn't what the Ombudsman was originally intended or set up for. And I think that then bridges to Victoria's earlier points around the governance and the decisioning powers of the Financial Ombudsman Service. And are they, in effect, to steal the phrase, being weaponised or gained, actually, for economic gain outside that of the individual who has potentially been disadvantaged? So I think that's a very valid point indeed. I think if we were to go back actually in time to the original concept of the Ombudsman, there were in fact several. There was a banking ombudsman, insurance ombudsman, etc., all perhaps policing their local patches, brought together under the Financial Services and Markets Act. And I think at the time there was a general sense of goodwill around an ombudsman service that could deal, in the vernacular at the time, the quick and dirty complaints, deal with those quick and dirty complaints that really would otherwise become mired somewhere between a decision that the firm might have taken that the consumer continues to disagree with and the courts themselves. At the time the Financial Ombudsman Service was inaugurated, there was a mechanism called complaints with wider implications, which addressed some of the issues that Victoria had touched on. And really, if I was to summarize its terms of reference, was very much focused on ensuring that where it was evident that the consequence of a decision made by the Ombudsman would have ramifications across the sector, then it needed to be considered in the round. And that acknowledged the fact that the Ombudsman, in determining complaints, doesn't have the sorts of consultative checks and balances that we have in other lawmaking and regulatory making processes. That complaints with wider implications structure wasn't wholly or widely used, was revised, I think, re-termed as issues with wider implications, and has sort of quietly withered on the vine. Actually, in the context of the industrialised complaints we've seen around PPI, perhaps before that mortgage endowments, some around pensions, certainly as we see in the high cost credit sector at the moment, I think there is a very strong case to say that there needs to be a step back and there needs to be a top-down consideration rather than a sort of generalisation from a specific complaint that is then spread across the portfolio of similar complaints of that nature.
Thank you, Eric. Victoria, do you agree that that would be the right approach?
I think it potentially would be an improvement, but I'm not sure. So it would probably be a mitigation of the issues that have now become entrenched in the FOS, and it's essentially a reflection of the fact that they are making case law. They claim that they don't set precedent, but at the same time, for obvious reasons, they try to be consistent in their decision making. So de facto, that is creating precedent, albeit not in a transparent way, because they don't publish their formal criteria. In fact, they claim they don't have formal criteria because all the cases are decided on a case-by-case basis. So you can see there's a lot of difficult things to try and reconcile together here, which when you are a provider makes it very difficult to predict from time to time which loan contract will be enforceable or which insurance contract you can rely on, and actually, does unfortunately incentivize opportunistic claims. And actually, I think as well, so as well as these things that perhaps were inevitable in the way the FOS was set up, because it was such an ambitious proposition to bring together the full range of consumer and now small business services together under one single ombudsman. Some of the issues actually, I think, were unnecessary. So the FOS has started seeing its duty not just as resolving complaints on a fair and reasonable basis, but it now sees its role as preventing detriment. And that's how the Ombudsman now talks about preventing detriment to consumers. Well, that was not ever part of their statutory function. And in fact, it's in many ways at odds with what the FCA sets out to do, which is not to remove all risk from consumer decisions.
Victoria, I can see Paul shaking his head in agreement, I believe. Paul, did you want to come in there on that point about detriment?
In absolute agreement, because it is the FCA's remit to set rules and to give guidance. It is not the FOS's remit to do that. They have a statutory obligation to look at each and every claim on its own merits and to decide on reasonableness and fairness, as is prevalent in the market for the particular kind of product, the particular kind of service, and the particular kind of delivery that was given at the time. And what they have slipped into, either deliberately or accidentally, is quite a binary mechanism, which is completely against their statutory obligation of deciding upon cases. So let me give you an example of that. With PPI, the decision-making process was binary based on two questions. Were you sold this product or were you not? Yes or no? Yes, I was. Excellent. Was the commission mechanism explained to you? Yes or no? No, it was not. Excellent. You have now won your claim and you will receive compensation for this sale. When you're looking at a complex consumer credit relationship that may span 10 or 20 years worth of trade with a particular organisation or organisations, if a complaint is levelled, then credit files need to be examined, income and expenditure checks need to be examined, the particular terms and conditions of the relationship that was entered into need to be examined, credit reference files. All of those things need to be examined by a professionally trained ombudsman, and a decision needs to be reached. And quite simply, they don't have the capacity to do that because of the sheer volume of meritless claims that they are being flooded with by professional, to use a common term, shysters, ambulance chasers. And it is a deliberate act on the part of CMCs to do that in order to force the FOS not to live up to its statutory obligations and to force them into binary decision making. I suspect that they are using algorithms to decide complex cases today, and they are making up their own rules, and their own rules at the moment, particularly in consumer credit, are based on the number of transactions that a consumer may have with a particular firm. And whoever said, whatever lawmaker ever said, you are not allowed, legally not allowed, to go above a certain number of transactions if you're able to afford the repayments, if you're able to afford the policies or whatever it is that you may be buying off the provider. Whoever said there was a set number of transactions that you could enter into without it becoming problematic or unlawful or anything else? Nobody ever said that. The FOS has decided that for themselves. And they are an unelected body.
This is a complexity issue. So it's a combination of two things. One is complexity. The other is that they have too much discretion to invent new rules.
They have absolute discretion because the FCA are only involved in setting budgets with them and making appointments to their board with them. And John Glenn at Treasury has put into writing on several occasions that they are an independent body and that the Treasury should not interfere with their day-to-day business. So who are they accountable to?
Well, maybe Eric could attempt to answer that question and also comment a little bit more on how fair or otherwise it is that they have this power to act on consumer detriment.
I think in the context of the challenge question, there's a wider point which is very valid across financial services. The powers for the financial service provider to challenge their regulator are in fact quite limited, and ultimately it comes down to judicial review. That is a very high bar indeed, and can be complex, and in scope is quite narrow, broadly based on whether the regulator has acted illegally or irrationally. My summation, so please take that as a high-level view, not a description of the law. But that actually in itself, in terms of scope, limits the capacity to use a judicial review. There's the reputational challenge around taking a regulator through a court process. And therefore, more widely across financial services, there is that imbalance when looking to challenge the regulators. I think unpacking some of the comments just a little further, there's also this challenge around consistency. So one counterpoint might be that by totting up the number of loans advanced and applying that uniformly across similar complaints, one is applying a level of consistency. But I would see that as rather simplistic for the very points mentioned. An individual will have very different financial circumstances to the next individual with a similar complaint. And this is where the industrialization of complaints and the volume handling of those complaints of that nature starts to fall down, because they do require individual consideration. And then within that, there's another dimension, which is fair and reasonable in the circumstances, very much risks straying into retrospection. In other words, a general view of what might be fair and reasonable today could in fact be considered or could have been considered to be at least acceptable in days gone by. A neutral example of that might be drink driving or wearing car safety belts. You go back 30 or 40 years, actually, these were acknowledged as perhaps not the right thing to do, but weren't necessarily seen as the crime that they are clearly today. And that retrospection combined with a lack of consistency actually creates something of a toxic mix. Again, those are the sorts of issues that perhaps could have been unwound if a proper consideration as a wider implication had been made.
Thank you. I'm going to bring Victoria back in. Victoria, if we go back to first principles and why the FOS was set up, I mean, how well is it actually done in those areas such as improving customer service, encouraging competition in the market, and thereby giving consumers confidence?
That's actually harder to answer than you might think. And this has been a bit of a recurring theme on the Who Regulates the Regulators programme, is that oftentimes there's very little post-implementation review of how well a regulator is doing versus its objectives as originally stated. And this is definitely the case with the FOS. Broadly speaking, its objectives were to improve customer satisfaction and trust in financial service products, which in turn would have a positive effect on the market because it would encourage consumers to buy financial products, knowing that if something went wrong, there would be a safety net where they would get a fair hearing. Whereas otherwise, you're not really going to sue your bank and insurance company in the normal court process. So this was supposed to give consumers confidence and be good for the marketplace and competition. Now, in fact, it was very difficult to find out whether that has in fact been the case. The way the FCA records data on complaints has changed over time for a start, so it's quite difficult to track consistently what's actually happened with complaint numbers. And obviously, as we've been discussing, the advent of complaints, claims management companies has possibly distorted that picture anyway by stimulating complaints. So it's hard to say whether an increase in complaints is caused by service provision getting worse.
Do either of your fellow panelists disagree? Is there any evidence out there that there's been any difference in consumer confidence as a result of the regulatory action, or just indeed in general?
I don't think there's been any difference in consumer confidence. I think that Victoria is going down exactly the right track. So from my experience with my own firm and looking across the sector and indeed across the whole financial services market, as I understand it from my fellow panel members on the Small Business Practitioners panel, the FCA, claims management companies. So let me give you some statistics. So 50% of the claims that we receive, we have never encountered the customer in the first place. They've never been a customer of ours. And that speaks directly to the lack of due diligence that I referred to before on the part of CMCs.
Sorry, that's 50% fake claims, effectively.
50% of them, we have never known that customer as a customer. So what is clearly happening here is £1 is being spent on a marketing campaign. That pound yields a complaint, a registration, let's call it that, because I don't actually think it's a complaint. And then that customer will be presented, or that customer's complaint will be presented to as many providers as possible on the speculation that they may have at one time been a customer of that selection of target firms. That's exactly what's happening. So we get 50% of them, we don't recognise the customer. When we examine the claims, I would say that in 5% of cases, we might look at that claim and say, do you know, the records aren't that clear, and erring on the side of caution and following Principle 6, we will compensate this customer or make them some form of offer because we can't be certain that they don't have a valid issue here, and that means that in 95 of cases, the claims are absolutely without merit, and that is the quality of what we're seeing from firms of solicitors and CMCs. So in terms of the path that Victoria was going down, that is exactly what has happened to the FOS. They have been widely, or the system's been widely abused.
And Eric, is this generally true for all of your members?
Well, certainly through PPI, we saw significant volume of spurious or speculative complaints, and that ultimately led to the FCA introducing regulation of the claims management sector, which previously under the auspices of the Ministry of Justice. And the issue, I think, Paul's called out is very valid. I think that the challenge is that where there's an economic opportunity, there are always going to be entrepreneurs. So what we saw with CMCs is that a number of that community moved to alternative business structures, which meant that they were regulated by the Solicitors Regulation Authority, not the Financial Conduct Authority, and were able, by and large, to pursue a similar strategy, which the SRA themselves are active in looking to supervise, but candidly don't seem to have the same level of resource that's required to match the issue. So there is certainly a challenge within the marketplace. And actually, I think if we went back and we thought a little about how the UK wasn't historically a nation of litigants and ambulance chasers, what we're seeing is something of a cultural shift. And I think the danger in not intervening and making sure that the regulation and legislation ensures that genuine complainants have their complaint aired and an independent third party considers them becomes normalised to the extent that society expects where something goes wrong, they may be entitled to a refund. And that's not really the nature of most complaints. The nature of most complaints should be that the product that was purchased didn't perform as intended, right? Or the communication of what that product should do for the customer wasn't really up to snuff. So if I buy a product, I should be pretty clear from the point that I'm thinking about purchasing it to the point that I actually purchase it, that it's going to do something for me. And then I should be pretty confident thereafter and very comfortable that it's done that. And if that hasn't happened, then there's broadly going to be grounds for complaint. But what we're seeing is we're seeing slightly more speculative arguments being run. And of course, one of the weaknesses that the industry can quite often find is that because these issues are speculative and are perhaps tangential to the design and the intended delivery of a product, there isn't necessarily a record base. And if there isn't a record base, very, very difficult, as Paul's articulated, to prove a negative. And that in itself fuels the same problem, the industrialization of complaints handling. And that, I think, is at its heart the sort of thing that we need to address.
Fantastic. So, Victoria, this brings me nicely back to you. If this is the problem, the industrialization of complaints, how do we regulate businesses in a different way without causing increased detriment to consumers? And given we are the IEA, in a more free market way as well.
Yeah, that's the real heart of the issue, really. I'd slightly, I think Eric very kindly there suggested that it was entrepreneurial, the process of this industrialization of complaints handling. I might be slightly less charitable and call it rent seeking, and this is sadly what the current system has delivered. So in my report, I set out a few ideas, and actually there's another development that's happened as well, which is some banks have actually set up their own sort of private ombudsman service, the Business Banking Resolution Service, which is a sort of private ombudsman dispute resolution service for small businesses that fall outside of the FOS jurisdiction. I think that's an interesting development, and in some ways takes us back to what the situation was before FOSMA in 2000, when there were a cluster of specialist ombudsman and complaints resolution services that perhaps was working better than what we've got now, and ideally a free market ecosystem in complaints handling and dispute settlement would be a better way of doing it than what we've got now, which is basically a sort of nationalized customer service department that the FOS is operating as. I do think as a first step towards this, something that the FCA neglects generally is its competition objective, and it does have powers to do market investigations and enforcement action on the basis of competition. And when it has done so in fields that touch on this, for example, in financial advice markets, it's found that there are serious difficulties for smaller independent service providers potentially providing services to less wealthy consumers, partly because it's simply not worth their while of taking on the risk of a small consumer who's not going to yield them much in the way of fees, but could come back to them in 10 or 20 years' time with an unlimited complaint on something that's gone wrong in their investment. That makes it very, very hard for IFAs to take on new clients. The FCA has acknowledged that this has given rise to an advice gap. And we know that in that particular market, I think the FCA really needs to step in and do a proper competition review of how its complaints handling rules, actually I take it wider and go into the whole principle of treating customers fairly, and what some lawyers have described as a disapplication of the rule of law. What is that doing to competition in the market? And also, is it just infantilizing consumers in a way that's going to be very counterproductive in the longer term? Why would you bother reading the terms and conditions if you know that if the product doesn't turn out as you expected, as Eric alluded to, you can just go to the FOS, they'll write it off and give you some compensation? I mean, I'm being slightly sort of facetious perhaps, but I do think that is how it does turn out in many cases, and that's not actually good for consumers, and it becomes a self-perpetuating thing where consumers become so unused to having to take responsibility for their own decisions that they get worse and worse at it, and therefore they need more and more support, and then we end up in a real sort of doom loop of more and more regulation and more nannying regulators. So broadly speaking, I do think opening up the complaints handling ecosystem to more specialist regulators who can compete with each other on how well they do at resolving complaints efficiently would be a good thing, and a proper market investigation of the anti-competitive effects of the current situation is also needed.
And would you also take on board Paul's contribution from earlier about ensuring the ambulance chasers pay their own way?
I think that could be a good mitigant and a good fix to that particular problem of the conflicts of interest and rent-seeking opportunities that have been created by the way the system currently operates.
Okay,
we are build actually. Sorry if I may, Andy. I think there's another build on the economics here, and I'm sure Paul, you'll recognise the interest cost that's added to the compensation, typically 8% simple. Well, you know, that in itself, particularly for longer run complaints, can amount to substantial thousands of pounds. Well, you know, at some point that stops being compensatory, particularly when you look at the courts that are typically awarding far lower levels of interest, and it starts to become penal. And that again perhaps points to the fact that the perimeter or the boundaries of the FOS's jurisdiction are being stretched in some way, if actually, you know, the economic consequence of applying that type of interest is more than simply restorative. So I think that's an important consideration we shouldn't lose sight of. And I think we also perhaps need to consider, by extension, because it's the period of time that elapses that allows for those large interest awards at that high rate, we do need to think a little about limitations. There comes a point where, of course, you know, probably after about 6 years, we'll all throw out our bank statements and our tax records because actually, you know, the period of time has sort of passed. Individual firms have to take those judgments and decisions on their own record keeping, and therefore the further back in time that you go, the less likely those records are complete and accurate. Comes back to my earlier point, which is that proving the negative or proving the circumstances in the absence of documentary evidence is very, very difficult indeed, and it starts to become a contest of assertions, which really shouldn't be the nature for decisioning any complaint.
Thank you. We are drawing to the close. Are there any final comments anyone would like to make, starting with you, Paul?
Yeah, just one thing, going back to Eric's earlier comments, I find it incredible that when the regulatory responsibility passed over to the FCA from the Ministry of Justice for CMCs, that firms were invited to self-certify whether they were a CMC that would come under the jurisdiction of the FCA, or whether they were in fact a solicitor's firm coming in the jurisdiction of the SRA, who have very limited resources and no regulatory teeth, so to speak. The gamification of the perimeter was permitted right there and then. And probably some of the most aggressive players that we see are actually classified as solicitors firms, even though they don't provide any other service than claims management. And I'm a firm believer that it is what it says on the tin. If you do claims management, you're not a solicitor's firm, you're a claims management company. But you can self-certify to be outside of the perimeter. I find that quite absurd. And the regulator turns a tin eye to those firms and says, sorry, they're outside of our jurisdiction, nothing to do with us, which then speaks to the fact that the FCA are actually responsible for running good markets, and they're not living up to that responsibility because they're ignoring what is happening to people that are inside their perimeter, firms such as mine, such as the trade association's members, and completely ignoring people outside the perimeter that are interfering with firms inside the perimeter. And I find that just ridiculous.
Thank you. Eric.
I think the only observations I would make in conclusion would be broadly, we certainly see the value of an Ombudsman service. We absolutely recognise the points that have been made in the IEA report. It's clear that the time is right for review. There is the review of financial services regulation ongoing. So potentially there is the window, and we should make sure we use this opportunity to get the complaints handling infrastructure that works in the 21st century and precludes the rent seeking or the entrepreneurialism, which doesn't serve the purpose of supporting customers with their complaint, but rather serves a purpose of extracting rent for a third party, which fundamentally must be flawed. And then my final observation would be that it would be a huge shame, wouldn't it, if the solution that we find will be tactical fixes that plug gaps that emerge in the gaps that emerge in the high-cost short-term credit sector, because for those on low incomes, that higher cost reflects the risk that the lenders take in that sector and is appropriate and is the only avenue on many occasions for access to credit. And if I think, or if some think that that is probably me being a little apocalyptic, we do perhaps only need to turn to other aspects of financial services, such as financial advice, where actually we've been through a generational change in the distribution of pensions with the deregulation, but there has been no systemic advice provision. There hasn't been volume across the sector, and the consequence of getting it wrong from a regulatory perspective, particularly in that market, is of course the levy for the financial service compensation scheme increases and independent smaller advisors exit, which makes things worse. So that does come back, I think, to a point we'd all agree on, that there needs to be a holistic review, and there does need to be, specifically relative to complaints, a mechanism where those with wider implications are reviewed and revisited in the round.
Thank you, Eric. Victoria, your closing remarks.
Yeah, I think this report was turned out, as you can tell from the discussions today, which we could go, I'm sure we could go on for much more time on this. It turned out there was a lot more to this issue than I was expecting when I first started looking at it. More broadly, I think it does show the dangers of weak accountability in a body like this. You know, as we said at the start, it's a limited company. It only has a memorandum of agreement with the FCA, and the FCA has some, you know, deliberately, it's supposed to be an arm's length independent body to give it independence in dispute handling, but that has a serious downside in terms of its accountability for the direction that it's taking. And unfortunately, I don't think ministers and MPs in relevant committees have done a particularly good job in holding the whole system to account. And as we find very often, unfortunately, consumer bodies are, you know, seem almost reflexively to defend something like the Ombudsman Service because it is nominally a pro-consumer measure and is a free service for consumers. But unfortunately, I think they lose sight of the bigger picture, which is that this is not ultimately delivering good outcomes for consumers as a whole. It might deliver good outcomes for individual consumers who manage to get their loan written off and get compensation or what have you. But for consumers as a whole in the market, it's not delivering a good service. And this is something that I think consumer bodies and MPs perhaps need to take a bit more of a nuanced view on.
And all that said, who have you got in your sights for the next paper?
Well, there are so many to tackle, but the one coming up this year that we'll really be getting our teeth into is the new digital markets unit that the Competition and Markets Authority is setting up to look at digital platforms. Again, this is one where you would think, looking at it, well, that sounds like a great idea. Digital platforms are so dominant and are exploiting their position. Surely it must be a good thing to get them under control. But actually, I fear there are going to be some significant downsides there as well. So we're going to try and tease some of that out. This time looking in advance at how we think this particular regulator might work out in its sector.
Thank you, Victoria, and thank you to our guests, Paul and Eric. If you're interested in similar videos or virtual events hosted by the IEA, you can find out more here on YouTube or on our website, www.iea.org.uk. And just recently, the IEA launched our Patreon page. You now have the opportunity to support the IEA on Patreon, where we've set up a membership platform that allows our followers to donate solely towards our digital work. And alongside this, you'll subscribe as an online patron to exclusive IEA perks, bespoke benefits, priority access to our content, and much more. And that's a promise I can make without fear of being regulated by any quasi-judicial authority. If you'd like to play a direct key role in helping the IEA produce stimulating educational online content, please head over to patreon.com/IEA London. Thank you very much.